The U.S. Consumer Price Index, which measures inflation at the retail level, climbed 0.4% last month, pushed up by rising gas prices and marking the biggest gain in more than 2 years. Well, Peter Cardillo, chief market economist at Rockwell Global Capital, joins us now to talk about all of this and more. A run-up for the Nasdaq. Now, of course, everybody, not everybody, but some people are saying, are we again in the Nasdaq bubble of the year 2000?
No, it's certainly not the same as the year 2000. It's a different situation totally. However, that doesn't exclude the fact that perhaps valuations are high. Basically, what we saw today was the market responding to a Fed that's on track to raise interest rates this year, but in a very slow manner. And that simply means that, we'll probably get one rate hike this year, then following maybe one or two next year. So basically, what are we looking at? We're looking at a Fed that's going to raise rates and not going to be aggressive. So that's still market friendly.
Yeah, Janet Yellen, the chair of the Fed, said yesterday it is better for us to look at the path of raising interest rates and not the date. And is that what you're talking about? Maybe one hike now, and how much of the hike should we expect going forward? Like half a basis points?
I would probably think that they're looking at 25 basis points, and then maybe another 25 basis point, perhaps in January, February of 2016. And they'll continue to assess the economy.
Does Greece weigh on the Fed at all? Some economists tweeted out yesterday that we'd get an interest rate hike faster if there wasn't such concern about Greece and Europe.
I concur with that. But, talking about Greece right now, things look rather bleak, No deal as of yet. Another emergency meeting on Monday by the Eurogroup. Possibility that the banks may not even open on Monday because of liquidity problems. But, and of course, a fair of a run on the banks, obviously. But, I think what we're seeing here with Greece is Greece playing a very smart move, not smart, but Greece playing a very hardline move, and that is simply because of the fact, even if they do default, and there's a possibility of that, I think that will that default will probably prompt a longer-lasting deal for them.
Jim Cramer on CNBC asked a good question today. Who lost Greece? And he's going to say Germany lost Greece, and because of that, Germany is not going to want to go down that path. I mean, they're playing a game of chicken, and then Greece may be able to pull itself out of it. Let me ask you about inflation. Consumer Price Index up 0.4%. When you take out energy, which we actually buy, things like gasoline, it was only up 0.1%.
Yeah, if you measure it by the core rate, inflation is still pretty much contained. There's no problem. But we are inching up next to the Fed target. And today's data suggests that, inflation and all the other economic numbers that we got out today, beginning with the leading indicators, Philadelphia Fed, and, of course, the nice drop that we saw in unemployment claims, all, solidify that the Fed is on track to raise interest rates, and that economic activity in the third and fourth quarter of this year is going to be closer to 3% as opposed to where we are now.
What do we need to see for prices to start going up? Meaning, are the quality of the unemployment numbers good enough? Are people earning enough more money that they're going to spend more money and drive up prices? Because that's where the path will go.
I think one of the reasons why, salaries are going up, but they're not going through the roof just yet. And the reason for that is there's been a change in the evolution of the labor market. And, skilled workers are basically scarce. And that's why we don't see, jobs creation in excess of, let's say, 300,000 per month. So what we're seeing is that low-paying jobs are the jobs that are out there and the jobs that are being filled, and so I don't think we're ever going to see a tremendous rise in salaries. Now we will see increments, obviously, but are we going to see the salaries rise like we saw 15 or 20 years ago in terms of economic activity? I don't think so.
Okay. Peter Cardillo, thank you.
My pleasure.